Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Scrolling through the comments section, wanted to touch on a couple of comments here and give you my opinion. It says, this is Let's Go Brondo. George Gammon recently interviewed Art Berman, a senior petroleum geologist and oil investor. He uses a crude yield curve created by his mentor to predict crude price action. He's not nearly as bullish as Andy, thinking even $150 a barrel is unlikely. However, he does suggest that we're finding a price floor for crude that should hold for many years. My takeaway was, if Andy's thesis is unreasonably bullish, a very informed counter argument still believes that buying around current price is very low risk. Worst case scenario, buying today is a pretty low risk inflation hedge to preserve purchasing power. I agree with that. There was another one who talked about Art Berman and his call on oil. If I scroll down here, it says Art Berman with 40 years in the oil industry shows a different story with his charts and analysis. He thinks $150 to $200 oil is crazy. Are you seeing 200 plus oil as a result from supply demand issues or just inflation? Seems to me that the global economic activity will be decreasing due to government interventions, thereby lowering demand. Guys, so the one thing I will say is everyone has an opinion. And Art Berman, whatever his, what people do is they look at somebody who's got years of investments, like we'll call it some sort of history, and they'll say that this guy's right because he's got 40 years of experience in it. He's an oil analyst and investor, et cetera, and maybe his argument or his beliefs or paradigm isn't as bullish as mine. I am incredibly bullish because under these market conditions, inflation and supply demand are going to push it higher. When I look, and I did watch his video, I didn't really get much out of it in terms of the financial aspect of money rotating over into oil. He's strictly a supply demand person. Now, if you look kind of more at the people that are financial types, and I think the financial types are going to be more right than some of the insiders, depending on who they are. But I'm just going to throw up some stuff here. This is just randomly grabbed, all right? And I'm going to tell you this: no one knows the future. No one knows the future. I don't know the future. Art Berman doesn't know the future. These CEOs and some of these investment firms, they don't know the future either. But what I can tell you is this: historically, if we were to do exactly what history has done under expansionary phases of real estate, which is coming up ahead of us, in 5 to 10 years, which is a good ways out, I would be willing to bet that oil is going to be priced somewhere around $200 or $300 a barrel, just based off of historical. That would be history repeating itself. So the stance that it doesn't do that would mean that you're going against what history and humans have done before. You're saying that this time is different. I am not saying this time is different. I am saying that this time's the same, and that's the price roughly of where it's going to go. Everyone else who's saying otherwise is saying this time is different. This time, under these market conditions, it's somehow going to be held down below $100 a barrel. I don't see how that's possible. Because when you've got inflation coming into the system, it's gonna price assets differently. Now, I just pulled some other random articles here, okay? And this isn't support of me. I don't really care what their opinions are. I'm going to have my opinion irrespective of what these people say. And that's really where you need to be. You need to come up with an opinion and an outlook or and a paradigm and saying, I think this is probably where it's going to go. And then you stick with it, and then you have to see data otherwise. I did release a huge 3-part oil on an energy crisis heading towards oil and why I'm bullish on it. It was an article that was very well written by somebody that laid out a whole bunch of things that basically it was information that I pieced together. I didn't piece it together for the presentation, but he pieced it together very well. And it's snippets that I've seen kind of randomly, and then I pieced it together myself. He pieced it all together in one article, and I put that out there for videos that you guys can watch. But here's something. This is JP Morgan. JP Morgan sees oil prices hitting 125 in 2022, 150 a barrel in 2023. In all honesty, and I'm not trying to pin people against each other, I think they're more right than Art would be. That's my opinion here. I'm not saying he's necessarily that his viewpoint is completely wrong, but my viewpoint falls in line similar to this. And if you look at kind of like CEO, Pioneer Natural Resource CEO on oil prices, he was saying 125, over $100 a barrel by next year. Oil prices for Jeffries, oil prices could move a lot higher and hit $150 when the world fully reopens. And that's right when they fully reopen. That could be next year. And I don't know the future here. All right. What I do is I look at history and then I look at market conditions and then I compare the valuation and the market conditions and tie it all together. If oil were to go to a 1-to-10 ratio and below with current gold prices, and all that's doing is accounting for the money system, and I think that we're going to have oil in higher scarcity than what we've had in the past because no one's putting money in for investments for it. So I think that it's going to actually compress further to the downside. So if I were to take a round number, and I'll just work this out with you guys, the round number being $2,000 an ounce for gold. Just a round number. It's probably going to go up a little bit in the future. It's probably going to be even higher than this when oil compresses. So if you were to take a 1-to-6 ratio, which would be what history has done for the ratio in an expansionary phase of real estate during an inflationary period with money rotating around. If it's a 1-to-6 ratio and we have $2,000, so that's 2,000 divided by 6, you're at $333 a barrel. That is history repeating itself like it was in the 2008 top. 2008 top was around a 1-to-6 ratio, 1 ounce gold, 6 barrels of oil. Now, if we go higher, if we go to a $3,000 price and we compress down to 6, that's $500 a barrel oil. Does that seem crazy? I don't know, guys. That's history repeating itself. $3,000 a ounce gold and $10 1 to 10 is a $300 a barrel oil. And I'm conservative in saying $200 to $300 a barrel. What I think people are missing is the inflation aspect of this move, because the majority of that is oil accounting for the inflation and people running towards hard assets into commodities. And everyone right now is only talking about supply and demand. They only talk about the one aspect. They don't talk about the inflation aspect of it. And when people start rolling and all this money starts moving around, it could easily be $300, $400, $500 a barrel. I don't know the exact amount. What I can tell you is we are uber cheap, and the ratios are telling us that. And with the market conditions coming up where it favors commodities, I mean, that's literally all you can do. That's all you can do is position yourself for the favorable outlook and the move. I'm not projecting these prices. What I'm telling you is that that's what history would project. History would project those prices, not me. It's not me. I'm not projecting these. It's the millions of people that put a price cap on oil and what that relationship is to gold. That is what the sentiment at a market top is going to price oil roughly at, is my guess. It's a 1-to-10 ratio to 1-to-5 ratio, somewhere in that range. So if I were to take a $3,000 gold price, I would think that it's going to compress somewhere between a 1-to-5 to 1-to-10 ratio at the top. That's a price between $300 and $500 a barrel. And that's probably 5 to 10 years out. 2028 would be 7 years. Do a 7-year call on it. That's kind of what I would think, but that's just history repeating itself. It's not me predicting this. I'm not predicting it. I'm not projecting it. I'm just telling you that the potential upside is quite large, and that the downside here, I think, is a pretty good risk-reward bet. Just because someone disagrees with that doesn't mean they're right or wrong, and it doesn't mean that history is not going to repeat itself. What I can tell you this, when looking at most people over the many, many years that I've been invested in reading all these articles and reading all this thing, most people get it wrong. They don't know what the future is. And no one would project $150 a barrel oil in 2008. No one did. They all said, they would have told you that you're crazy. And you think that it's not going to exceed 150 would be, and with all the money that's been created between 2008 and today, which we've probably that'd be a very interesting thing to see how much money's been created since 2008. It's probably triple the money supply. And if that's the case, then $450 a barrel oil would be the same in relationship to the money supply back in 2008. So I don't see why that would be out of the realm. And in fact, I'm more bullish oil today than I was in 2007 and 6 and 8. And granted, I was a new investor. I didn't know what I was doing necessarily. But the reason I'm more bullish is we're not investing in oil, and electric vehicles aren't going to make up the difference. There's no way. We're heading straight into an energy crisis in oil and natural gas because the investment money's not going into it. We're probably short $500-600 billion in investments in oil, and I don't know how they're going to stop the move. We can get to $100 a barrel oil, but it takes about 4 or 5 years to get oil from the deep sea spots, and that's all that's really left. There's a couple of spots maybe in OPEC that can increase production, but I don't think they've invested the money. I don't think it's there in the time frame that we want it to be. And if you don't invest in oil, this stuff declines continually. Declines 6%, 6 million, 7 million barrels a year, decline. Every year you have to replace it. So you got to have some money just to go in to stay flat. Our demand is increasing quite rapidly, the fastest pace that it ever has been in history with this recovery. And it's not really a recovery because they stopped it and then they restarted it. And it's just going back to what it was before. And you can get all these different opinions, guys. And you know what? Maybe I'm more bullish than everyone else. Maybe I'm the expert and they still need to learn about the financial markets. I don't know. I really don't know. Maybe they don't know the financial aspect of this stuff. Maybe they don't know the inflation aspect that is priced into oil and they're only looking at the supply demand. Maybe they're completely right with the supply and demand, but they're not getting the inflation aspect. I don't have the answer. I'm not saying that I'm right or wrong. I'm not saying they're right or wrong, but I'm a huge bull. I think there's low risk to the downside, huge upside potential. And that's really what I'm interested in. Do I think some of these guys are right? I can't see a world where we don't go over $100 barrel oil. That's me. And I think we're going to do it before the end of 2024 or before the beginning of 2024 or the end of 2023. We're going above 100 somewhere. I don't know how high. I don't know if we hit 200. I don't know. Not sure. But it's going to be a squeeze at some point, I think. And I don't think OPEC's got the spare capacity. They're already underproducing for their quotas. So that's my take on it. Maybe I'm wrong. Maybe it doesn't get above $100 a barrel. Maybe it stays where it's at and everything kind of just sits there. And we still make more money because the oil companies are still undervalued. So that's my opinion. I just wanted to get it out there. The best thing you can do is think for yourself. Don't listen to me necessarily straight up. Don't listen to Art. Don't listen to any of these guys. Form your own opinion. Form your own opinion. Tell me why you formed that opinion. Put it in the comment section what your opinions are. Where do you think oil is going to go? I'm still in the camp that we're going over $100 for sure. I think by the end of this inflationary cycle, that we're probably going to be far higher than where we are today. I mean, what will be multiples higher? What the exact pricing is, I don't know. But I think for a conservative estimate, $200 to $300 a barrel is probably easily going to be within reach, with the upside being far higher than that. If we get a blow off top, if people get scared or they just kind of run into it, if there's a shortage of some sort. And I think it's going to happen within the next 5 years. That's what I think. But that's my opinion. Let me know what your guys' opinion are. Put it in the comment section. Love to hear your guys' opinion. And thank you for listening. Thank you for commenting. Love to hear your guys' opinion and comments. See you in the next video. It's Finding Value.